Hello, YouTube. Today, Powell tanked the stock market and we're closing down by over 1.5%. We note that we did poke over our 50 weekly. We're still green on the week, but we now have a failed weekly breakout. What's so interesting, too, is that when we look here to our daily chart, this head and shoulders, knees and toes appears to be playing out. And we now got a full gap fill and a close below the 200 DMA. So, what exactly did Jerome say? And was it all related to him? We're going to talk about how his legacy risks being tarnished more by SVB. So, what did he do? Well, today he did not really answer any questions about SVB. He said, I'm going to defer that to Vice Chair Barr. We're doing an active investigation, blah, blah, blah. And I think that he did not get any gotcha moments today. I think people tried to get him. They're like, oh, here's a question. Here's a curveball. He was able to dodge them. He did it well, but the market closed down. So is this just technical? Is it positioning as we talked about yesterday? Or is there more at play? I have two images here we're going to look at in a moment. It is pretty much what I laid out to our group this morning. Again, link in the description if you link at the top, and then in the description if you want to join us for a 14-day free trial. But what I mentioned is that I was looking for a bullish setup and then also a bearish setup for S&P and for that same on QQQ. You can either pause the video or we'll come back to these in a moment and explain exactly what I was looking for and what manifested. Let's just get these headlines out of the way here. So Powell attempts a dovish hike. Yesterday, we talked about a hawkish pause or a dovish hike. And again, this is a fluid story. It is moving fast, so things might change between now and overnight, but that's what the headline is. He attempts, again, keywords attempts. This is Nikki from Nikki Leaks. We can also note here that we got Fed raises rates, but nods to greater uncertainty after banking stress. This is the article written by Nick. Why is this one important? Just read the headline. That's what it pretty much tells us. Here's what happened with the Fed. And I have to read through, I have to go through this a little bit more, but it's really what we talked about yesterday and also what I believe I mentioned on the weekend. I highlighted the area that is important here. This is the SEP, or the Summary of Economic Projections from the Fed as of today. And what we noticed that the only thing that changed is that for the median price here, let's get nice and close for those boomer eyes. The number below is going to be what we were provided in December. The current one is as of today. So what changed? Well, only 2024. It went from 4.1 to 4.3, and that's about it. So not really much changed here. Market had a reaction higher. Other one I would look at here is going to be core PCE. This one did tick higher by about 0.1 as well. So the Fed pretty much had a chance here to cop out, and at least for me, it looks like they did. There was one other headline that crossed that people might have missed that happened right around the same time as Jerome, and that is that Secretary Yellen, who used to be in Jerome's job before, says we can debate in the future whether to raise the FDIC deposit insurance limit above $250K. So what does that mean? It means that regional banks got a big old sell today, got a big haircut. That headline crossed while she was giving testimony at the same time Jerome had his press conference. So we'll take a quick pit stop. We'll take a quick pit stop here and have a look at regional banks because this is not really pretty at all. What I want to do as well is actually flip here to full candles so we can actually see whether we are advancing or declining. And most bars here are full, which means we are closing lower than where we opened. Whether it's green or red, it just means the close is lower than where we opened. There's only been 1, 2, 3 days where we're actually getting momentum to the upside. And Jerome pretty much said that we cannot be there to save everyone all the time, and this just got a big old sell. First Republic is probably the most notable decliner today, down by about 15, right around its lows. You can't even really see those candles, right? Yuck, that looks terrible. And then the other thing that I mentioned what's concerning me is also IAK. This is a insurance ETF. And insurance companies, usually when people are scared about insurance, again, Warren Buffett loves insurance. It means people are scared about the future, and there might be what? An insurance claim. That's why they don't want to own them. What's the insurance claim? Some kind of disaster. It could be financial disaster, natural disaster. That's what insurance companies basically shore up. So this right here was flashing a warning to me all day today. We're going to look through some other interesting things like the dollar being down, stocks down, but gold up, and then Bitcoin getting big old sell, right? Bearish engulfing daily candle, ETH about the same, gold is up, oil's up. Man, it's like confusing out there. It is 100% confusing. And if you watched yesterday's video, again, you can just go to the channel if you want to watch that. We talked a lot about positioning where I think it's really important to understand where people were positioned going into this week versus where they are now. If we have a look here to the note that I laid out, this is going to make it really easy for me to try to just dissect it. So for the bulls, I want to see a green day, want to see us close higher than we open, which means we're advancing on the chart, ideally over the 50 DMA. What did the bulls do? Okay, bulls, initially they got us over the 50. We were holding it, and then it was gone. And I pointed this out to our group. There was a very critical point that I was looking at here, going back to hollow candles. We have this period right here where we have the hollow candles, which means the expansion. Natric went higher. Natric's usually the opposite move of what we truly do. That was true to form today. Right here, we get a bullish engulfing candle, then we get an immediate reversal. So when we stopped forming those higher lows, it just meant that the bears made an attempt. It got bought up, exhausted higher, and then we started going down. So this was the warning sign for me right here. The bulls did hit the levels that I wanted. The problem is that they did not hold it. We didn't close green. We didn't close higher than we opened. And I'm going to ask you one time, please and thank you too. Consider smashing that thumbs up and subscribing to the channel if you're enjoying the content. Thank you so much ahead of time. Looking here, we can also note that for the bears, I wanted to see a gap fill at 394, check. Ideally, a close below the 200 DMA. That's exactly what we got. We closed here below the 200 DMA, 392.53. We closed at 0.11. So that is a close below the 200. We also got our gap fill here, which is what I told you I was really worried about. Well, we got it. So gaps filled now. We're right on strong support. What do we do on strong support? Well, we definitely get scared, right? So a little bit more scared than yesterday, down at 37 fear here, but really not that big of a move. And now if you look at the last part here is just failed weekly breakout, falling back below 396. Check. So that's 1% below where we are now. Right, roughly 4 points is going to take us to 396. And this just looks like a rejection here on the weekly now. It's what I alluded to at the very beginning of the show. It just means that we printed a higher high, but we failed to hold it. We didn't hold last week's high. So that's a failed breakout. It's a 50 MA reject. After last week, we already got it rejected too. Remember, it's Wednesday, so there's still 2 days left to trade. And in this market, that is an eternity. If we also look here to the SPY on the one-day chart, so we have to think about, what does this tell us? Well, we got our bear downtrend, right? Every time we hit this area, we rejected, but now we're actually still above it. So we have a very bearish move with a short-term bearish pattern. But remember, this pattern is like a lot bigger, has a lot more time on the chart. So it is a lot more significant. That's what it should be. So if this short-term head and shoulders leads to knees and toes, it means that we're going to fall back below our bear market downtrend. And that's like a pretty easy story to follow. We're back below our averages after a golden cross, but we're below the averages. So it's not a proper signal. That's an easy story to follow. All right, now let's have a look here at QQQ, because QQQ has been the leader. And if we have a look at the gains today or the losses, QQQ down by 1.3, SPY down by 1.7. So it's still showing me that the NASDAQ is still the leader. So if NASDAQ holds up, maybe there's a chance for us to go higher. Banks are notably red, but everything's red to be fair. We look at the last roughly 1 week just to smooth it out. Okay, financials red, some utilities red, but it's still like mostly green. Even with the losses, Google up 10 in the last 5 days, Apple up 4, Nvidia up 11, Microsoft up 5. Man, it doesn't even really seem like there's that big of a deal yet, right? It's a flesh wound until it's not. So let's have a look here at QQQ or the Qs. For the bulls, I want to see a green day. I want to see us close higher than we opened. Let's have a look at QQQ. I'm going to go to those hollow candles again. Sorry, boomer eyes. Right, that sounds pretty cool, those boomer eyes. All right, there we go. Hollow candles. We have a daily bearish engulfing candle. We're below yesterday's low as well. Closing at the low signifies there's pressure building up. Probably going to want to release tomorrow. Elevated red volume, but not as big as the previous days. So the bulls made progress, but they did not hold it. They advanced, and they got pushed right back. They got met with sellers. For the bears, I want to see us fall below 309. Check. Why? A failed weekly breakout is us falling below that 309 area. What did we do? Well, we're below 309. We got a bearish engulfing daily candle or momentum building up to the downside. And on the weekly here, we're still green on the week, but it's a failed weekly breakout now. And we talked about these areas too. We're still above 305.12, ironically, to $1 at the close and in the post market. But we didn't quite make it up here to, actually, I think there's an area I forgot to look at now. We have to look here to our monthly chart. It's high right here, 31469. Well, we made it into 315. That was a big area I was looking at. Monthly higher high. And I forgot I was going to go over this too. So we'll just hide everything for a minute here. We're going to look at S&P and QQQ. QQQ is still green on the year. It's got a bullish engulfing monthly candle, not above the previous high though. It's up 4 on the month. S&P is back to flat, down 1%. So lower high, lower low, below below the previous monthly low at about 393. So the question is whether or not the S&P is going to be able to rally without the entire market. Can it be the S&P 5 or the $5 trillion companies to drag us higher? Yes or no? And if you wouldn't mind smashing a thumbs up and consider watching the video from the weekend if you've already done that, queued up here on the left-hand side, that would be appreciated. If not, I look forward to seeing you tomorrow. And maybe you want to consider joining us for a 14-day free trial and trade with me, Justin from YouTube, by going to thealgo.com. Thank you ahead of time.